Yeah. Hi, everyone. How are you doing? Sorry, we're starting 7 minutes late. However, I think there's a good number of you present already. Hi, everyone. I'm Nitish from ICICI and this webinar is for discussing how to develop strategies using data from Breeze API, and then later at some, in some later webinar, we'll look at how to implement these strategies. So let's do a quick recap, right? What have we done in the past two webinars? So in the first webinar, we went right to the beginning and I talked about what is Breeze API, what are APIs in general, okay? What are APIs in general? Uh, how do APIs bring innovation to the technology space in general, from Zomato, Swiggy, and so on. And then we went into what are trading APIs, how trading APIs have led to a lot of innovation in the fintech sector. Uh, you know, we also talked about that there are two kinds of trading API, as in, there is one set that is exclusively for order placement or order management, trade management, and so on. And then there is a set of information APIs. So the information APIs can be historical data or live data. And why we club them together is because, say, for example, your algo starts at 9:15 a.m., right? So let's say your algo is using moving averages or some historical series that it is continuing with. So at 9:15, when you start, you will need to fetch the historical series of the previous day end, right? And that from that series, you will then start calculating today's thing. So the historical and live go hand in hand. Even though historical, many of you when many of you think of historical data, you only think of backtesting or analysis or data mining. Well, even when you get to live, the live part of things, even there you will need historical data to some extent, right? So that's the entire data APIs are at one side. Uh, so we discussed these things. In the very first webinar, we discussed on the various choice of languages, why you should go with Python. Very quickly, you should go with Python because there's a lot of documentation. 70 to 80% of people who write trading algorithms write it in Python. So therefore, there's a lot of support, commonly found SDKs, commonly found libraries and helping libraries and so on. Then we talked, once we had decided of all the available languages, Python is the most accessible in many ways. Then we talked about what are virtual environments, what are the different why you should use virtual environments. Very quickly, we explained that virtual environments help you isolate your libraries. You have in one on one side on Python you might be doing trading. In another one you might be developing I don't know, some notepad application or some website. So to keep your all of these libraries in sync in the in different versions and so on. So that's why you need virtual environment. And then we of all the virtual environments available in Python, we went with Conda, Anaconda, right? Then we went to then we went to the choice of ID, right? So the ID stands for Interactive Development Environment. So the interactive development environments available. We saw we could write code in anything from Notepad to Sublime to VS Code to Visual Studio, Eclipse, and so on. And then of all the ones available, we evaluated them, and we figured key for us, for the common layman, there are two good environments. One is your Jupyter Notebook or notebooks, and the other is VS Code. And of these two, we found that although Jupyter Notebook might be simpler to use, might be easier to use in some ways, it is more suited for data analysis and so on. But we also figured that we also, this is coding, right? So we need a professional, some helpful, coding tools, right? So we decided that VS Code was the best. So and then we saw how to create an app, generate a session in Breeze, how to create an app in Breeze, how to generate a session in Breeze, and how to get started. We downloaded one single set of data. That was our first webinar. In the second webinar, we started with understanding the different kind of basic data structures in Python. again, we looked at lists. Mainly, we looked at four. We looked at lists, which are nothing but like, in square brackets, you have 1, 2, 3, 4, 5 elements. Those elements can be anything. They can be a number. They can be a character. And how to play with lists. Then we look at dictionaries, which are key value pairs. Key value pairs. It's unordered. It's unlike lists, which are ordered, where you can list item number 1, list item number 2, list item number 3. Dictionaries are unordered. So it's a comma 1, b comma 2, c comma 3. So there is no inherent order in a dictionary. However, dictionaries make it easier to store key value pairs, right? Then we looked at series, then we look at pandas data frame and pandas, and within pandas we looked at pandas series and looked at pandas data frames, and we saw some basic manipulations. And what we did was we took all the. Then what we did, we ran get historical data, Breeze's get historical data function in a loop, right? We ran it in a loop. We downloaded a whole set of data for an entire set of data, which was 5-minute candles of ICICI Bank share price. 5-minute candles of ICICI Bank share price. So that's what we did in the second session, and we took that data and we ended the session by taking that data into a data frame and understanding some basic data frame operations. Okay, so that's where we left off in the last session. Now in this session, now we're going to get into some real analytics, right? And again, I'm going to show you some basic functions. This is not rocket science, so again, the whole effort for this entire webinar series is to start from scratch. I know Salil had taken things to a very, very advanced level, but let us have I'm again laying foundations for people who are first time users of these, first time coders, first time data analysts. Okay. And I'm going in painstaking detail because so after those webinars, I talked to some people who are experienced, who are maybe even some of them have even implemented machine language models, right? Have AI models. But then when I broke it down and when I went through each item step by step, what is the list, what is the dictionary, what is the series, they said, Nitish, even I learned something. There was something I did not know, right? So don't worry, guys. Nobody starts off as a professional. And even if you even if you watch like 1 hour video and 90% of it, that 10% that you don't know may make all the difference later in your journey, right? So now let's coming to the present. Today we will talk about simple moving averages. I'm pretty sure you guys know what simple moving averages are. I'm sure you've seen indicators on the charts and all on TradingView charts. Even if you haven't, we will see what it is today, and we will do a simple moving average crossover strategy in Pandas using the data that we picked from from Breeze API, right? So I think today we'll not be using Breeze API as such. So again, this is not product promotion. This is more of education, right? Only thing we want to do is to get you to learn. And okay, also one more thing, let me just say, even those of you who do not intend to become algo traders, today's session is very relevant. Last 3 sessions have been very relevant. You will learn some basics of data science, some basics of understanding series and time series and how to use them to the best of your advantage, right? So this is for everyone, the entire thing. Right? Can I share my screen? One moment, I'll just share my entire screen. Guys, can you put in the chat if you can see my screen? Yeah, I think now you can see it. Now we are at ICICI homepage. Let me just take you through. And we did this one thing, right? So although I have written down the code, I will walk you through the code. So I'll take you over it line by line. Let me just see if my okay. So now here we are at a blank IDE screen. Okay, remember we installed Visual Studio Code. So, you go to your whatever start menu, start button is, and you type code there, you will see code. So, okay, here we will go down with the others. So, at one point in our last webinar, if you remember, I'll just show you the code where we did that. Here, right? At this point, we took all our historical data and we stored it locally. I showed you key Pandas, Pandas data frame is such a versatile tool. And by the way, I mean, I pointed this out in the last webinar, but there's, we could also cover can we also cover a simple strategy to trigger buy on an SMA crossover? Viren, I hear you. Thank you, and please feel free to put comments in chat in the live chat. See, the journey of let me step back a bit. So the journey of an algo trader or a systems trader, even if you're not using algos to trigger those orders, the journey is quite simple. It's very I'll boil it down to 4-5 simple steps for you. The first thing you do, the first thing any trader needs to do is get their hands on data. Okay, now you will think, some of you who have been like traders for years and years, you will think, man, I never historical data download nahi kiya. I never had to do it. Well, no, you don't have to do it. You have been doing it without thinking. You have been looking at charts, right? What are charts? Charts are nothing but pictorial representation of historical data. So you have been working with historical data, just that you've had a very intuitive but weak approach of drawing lines on a chart, right? And then maybe you have like you scroll left, scroll right, you would have moving average, and then you would have to keep it in your mind ki yahan par mera acha gaya tha, yahan par moving average and RSI work together, but yahan par nahi, yahan par kiya. You would have had to store all that results and all that intermediate analysis in your head. You use historical data in terms of charts, right? So the first step of any trader, any serious trader, should be getting their hands on data. Next step is data analysis. You would apply this indicator, that indicator, 2 indicators in combinations, 3 indicators in combination, then 3 indicators in combination with stop loss, take profit, then 3 indicators in combination with stop loss, take profit, and some other varied signals. So then maybe trailing stop loss and fixed take profit and so on. And then at the last step you would add in your transaction cost, right? Transaction cost, 20 rupees in and out if you're doing it on any other way. On Breeze, of course, we have launched Breeze Zero. So let me put a little plug for our latest offering, guys. On Breeze Zero, futures and options trading is 0 rupees brokerage right now, whether you buy or sell, whether it is future and options. The only charge that you'll be charged will be statutory charges, the STT, GST, things like that, right? But the brokerage itself is flat 0. So then you would so again you have 3 indicators. You have stop loss, take profit, and then you have your brokerage charges, and then you would have a slippage. So this would be your total analysis, right? Then this would present you कि यहाँ पर opportunity है कि नहीं है, right? And then you do this for ICICI Bank, you do this for Nifty, Bank Nifty, you do it for Falana, other restrictions one, and you repeat that process. So this data analysis is just the second step. You're just at the second step. The third step would be backtesting. Okay, you have used data analysis, not backtesting. Okay, just putting, say for example, to simplify it, Mr. Bipul Singh, yes, previous session recordings are available. You can just search a channel, ICICIdirect.com channel. Yeah. So okay, now coming back. So now you've done all your analysis, and this is something, and it need not even be Pandas, right? It need not be Python. I'm sure many of you have taken historical data into Excel, applied moving average there, applied your crossover, applied a signal there, and then figured out whether there is an opportunity here or not. But you're not at a system yet. Now to come to a system, now you have to backtest it, right? Even if you're going to execute it manually, by the way, guys, even if you're going to finally execute it manually, you must backtest your system programmatically. You must, simply must, okay? So then your third stage becomes backtesting. Third stage becomes backtesting. Then finally your fourth step is taking that algo live. You may be doing some, what do you call it, paper trading. You may paper trade it for a while, but I'm pretty sure on paper trade, if your backtesting was tight and good, right? A tight backtest, a tight and unforgiving backtest. It's like, you tortured the data to get yourself some, alpha on your data analysis. But you cannot be so relaxed with it in backtesting. In backtesting, you really have to punish yourself. You really have to expose yourself, and then you take it live, right? So going live is actually just the final step, right? So Viren, yeah, you said you got it, but just for everyone else, we will do a live trading maybe 3 or 4 sessions down because I have some other journeys planned for you. Okay, so I do really want to educate you on uh, what it takes to go for to have a sure shot algorithm. Okay? I hope Viren and anyone else who's concerned with this, we will go live, but have some patience. Again, something I said in the very first webinar, I think it bears, the kind of losses I see some people making. If trading excites you, you should not be trading. Trading should be boring. Algo trading, most of all, guys, I have talked to so many algo traders who use Breeze or use Spring, and they all say one thing, and one thing is most common, is that algo traders do not get excited by their wins or losses. Okay, उनका एक्साइटमेंट इससे नहीं होता है कि आज 1,000 रुपए गए कि कल 10,000 रुपए बने थे मेरे. An algo trader is excited by, did my hypothesis work? Did my mathematical equations work? Did my logical thinking work? For them, that is the true test of their acumen, not making money. So if trading excites you, stop trading, go back to data analysis. Okay, and if you're trading without data analysis, then God help you. All right. Okay. So coming back, so last time we were playing around with data frames. One of the things that I showed you that Pandas can do is that it can very easily store data locally as a CSV or as an XLS. In fact, you can even export your data frame as PDF and I think a bunch of XML and a bunch of other formats. So this is one of the things we did, right? So let us carry that over. Now we know we are going to, we're going to use the same data. So let me just import Pandas as PD. And since we saved it last time, let me just save this. Okay, so another thing, that was a request, not from the audience, because I wish this was coming as an audience. Mr. Shivatanu, can you please maintain English? Sure, sir. I'll try to maintain English, but sometimes I get emotional. So I'm sorry if I get carried away. If there's anything that you did not understand in Hindi, let me know in the chat, and I'll surely repeat myself in English. Right? So okay, again. So here I have imported Pandas as Pandas as PD. Why do we do this? So that it becomes easier to write code, right? So we had saved this CSV file, this data as CSV file. So let us bring it back from memory, right? So Pandas gives us a very simple function to do this. PD dot just read CSV, and we'll just give it this. And now that we have read it as CSV, let us store it as DF S data. S data stands for historical data. Sorry, this is one very simple. The system has been giving you trouble. So this is very slow. Okay. Import, now it will import. And now we take H data into CSV. Now let me repeat a couple of functions that we used to play around with, or rather, so one thing we can do with H data. So let me let's just highlight this and print this. What happened? What I did was I simply highlighted the variable name and I shift entered on VS Code. Shift enter. Hold down shift and then punch enter. What it did was it printed out the first 5 rows and the last 5 rows. Okay. What does this allow us to do? It allows us to get a feel for the data. But if you really want to see how many columns and how many rows there are, you do df_h data dot shape. This tells you that there are 17,340 rows of data, and then there are 10 columns. let's look at what are the columns. So how to know what columns there are? Dot columns. That's all it is. Simply writing df underscore h data or columns tells you the columns. So we see that there is an unnamed column, 0 is close, high, low, open. Okay. It's a little, my mind, but it doesn't really matter because that's not how we're using it anyway. And then there is last time so last time we did do SMA, right? I wanted to leave you with a little teaser to play around with, right? So we did look at a 12 period simple moving average. So this is how many columns there are. Let's see what the first few dates available are, although they were available in the default view also. But if you do h data.head, you will see the first by default 5. If you want to see any other number, you can put in any other number. So if you want to see the first, the head, right? It's the head of the table. You can do df underscore h data dot head bracket 10, and it will show you the first 10 from 0 to 9. Mind you, look at the index number, right? It's 0 to 10, 0 to 9. That means the first 10 you can see. So what is the very first one? The very first candle of data that we have is 2022 January 3rd, 9:05. That means that is from 9 o'clock to 5 o'clock, 5 minutes past 9 candle. Okay. In that period, the high was 743. The low was also 743. Okay, so maybe there was not much of a candle at that time. Okay. Then let's look at tail. So we can, just like we look at the head, we can look at the tail and we can determine what was our last candle available. Here, let me not repeat 5. Let's just look at the default. Now you see our very last candle is for 325 on 30th of December 2022. So our data is exactly from 3rd of January 2022 to 30th of December 2022. Okay. All right. So now we know the head and tail of our data. Fine. Are we satisfied? Right. We're satisfied that we have picked up our stored data from this historical data, this CSV that we stored. Now we have faith that we got it wrong. Now let us move to, now let's look at moving average. Let me show you what, again, this is for people who are absolute beginners. You have never seen anything before. You fire up your basic, fire up any spreadsheet program you have. If you don't have a spreadsheet program, you can always go to Google Sheets. Google Sheets will, the free version is always free. If you have a Gmail account, you can use it. If anybody needs to know how to use Google Sheets also, then you can put it in chat or send us a mail. Okay. So now, so what is a moving average? Oops. So let's say I have a bunch of data, right? So we have 10, 11, 12. So a moving average is simply like you have a series, and then you're applying a window. You're applying a window, and then you roll that window down the series, right? You roll that window down the series, and then you do some kind of an operation with it. Here, when we say moving average, we mean it's a moving, sum of elements divided by number of elements. It could even be a moving sum. So let's start with the moving sum. Okay, let's start with a 3-period moving sum. Okay. So what is a 3? So when you're applying a 3-period moving sum, and your series starts with 10, right? When your series starts with 10, what is your thing? You don't have a previous period, right? So here you cannot have a 3-period moving average. Let's move to the second element. Do you have 3? No. So you cannot have a 3-period moving average without 3 elements. Now you get to the third one. Now you have three elements, and now you can do a 3-period moving average. Okay, or moving sum. So let us do a sum here. It is equal to sum, and we select these 3. Okay. 33 is the moving sum of 10, 11, 12. Right? Intuitive. 36 is the moving sum of 11, 12, 13. And 39 for 12, 13, 14. And now in all spreadsheets, you can probably just drag in So you're moving series. Your series itself is 10, 12, 10, 11, 12, and so on till 23, and you're moving sum is 33 and so on to 36. So intuitively from sum, and I know that I'm using only three elements, right? I'm using only three elements. So intuitively, the moving average of the average of the first three elements should be 33 divided by 3. Fair enough? So this is 11. Moving average is 11. 16, 12, 13, 14, and so on. I hope it's intuitive. Anyone can put. Yes, yes, exactly, Viren ji. Exactly, Viren. This is the moving, this is the cumulative. Where is that? Okay. I don't know where that vanished, but I thought I saw Viren say that it is the cumulative moving cumulative sum, right? Come sum. It's also in some. Is this available in this spreadsheet? Come sum. But in some places it is called the cumulative sum, which is as some cumulative sum, right? So yeah, Viren, that's exactly what we're doing. So let's drag this. So now from moving sum, now we can get moving average. Right? So now this is our moving average, and we do not have moving average for the first two elements because you need three elements, right? The window size we picked as 3. The same thing we could have done if we had simply used average on the original series. Sorry, three elements of the original series. First three. See, you see, it's exactly the same element to element. So we could have just done equal to average and then moving average. Okay. Now, guys, use your imagination a little bit. Use a little bit of imagination. Okay. If I'm doing an average of, let's say, let's say a week has 5 days, right? 5 days a week. So I do a moving average of 5 days. Right? And on the other hand, a month rounded up has 4 weeks, so therefore 20. So on one hand, we have a weekly moving average, right? Five trading days, and then on the other hand, we have another 20 period moving average. Okay. Now, just use imagination. Which one will, let's say, towards the end of the month or in the middle of the month, there is a sharp spike in price and then it level off, right? So when I have a 20 period moving average and I have a 5 period moving average, which one will react faster? Which one will react faster to the change, the quick change? 5 period, right? The 5 period moving average will react faster. Whereas the 20 period moving average, which has a lot of baggage on it, right? Historical data consider karte hue, it is like a slow train. It's like a slow train, whereas you have like a roller coaster on the 5 period average. So therefore, what our hypothesis here is that the 5 period moving average will react quicker. The 20 period moving average will react slower because there are a lot more numbers. The newer numbers, when they come into the window, it will be a very small part of it. Whereas the small, five period, it will move really sharp. So the idea is that when the fast moving average crosses over the slow moving average, that's when we say there's an uptrend, and therefore we should take a long position, right? And when there's a downtrend, the short period moving average will cross under the long period moving average. I hope I was simple enough. I'm not getting much of a feedback. Yes, period. You were right. 5 minute will be faster, and therefore we come up with a crossover strategy. Right now, we want to analyze this crossover strategy over a very long time, over 5-minute candles of ICICI Bank stock data. Let's get to it. Okay? Let's get to it. So the very first thing we do is that we take the data and then we just take the top. We want to acha. So another thing, aside, you have open, high, low, close, right? We have 4 series in OHLCV data. We have open, high, low, close, and volume. Volume would be relevant if we were talking about an illiquidish stock, right? We would, we would want to know, or maybe we were calculating something like RSI, right? When you're calculating something like RSI, then maybe volume is the volume matters. But if, say, for example, you just, or when you're doing certain other kinds of analysis. But here we simply want to see the market movement. We are confident that ICICI Bank shares are liquid, right? There are very few strategies that you would want to implement in illiquid stocks. So what matters to me? So volume we don't need to consider. OHLC, the highs and lows, well, they might matter when I'm calculating slippage much later, right? Right now we're doing the analysis point. When we're doing backtesting or paper trading, then we want to consider that the open and or the high and low. Usually, what we talk about is closing prices. I mean, let's just go with the convention, right? We just want to use the closing prices. So let us make a data frame. Let us reduce all this to just time and close, right? So what do we do? So guys, look here. This is important, right? You will be doing this a lot. This part of the of data frames will be something that you do a lot. Now I want to create a new data frame with only the time and close. I want to drop all the other fields. Now what I could have done is dropped it from the original data frame. But I don't know. Maybe later I will want to reuse that original data frame. Sometimes you just like wary of deleting entire variables. So let me not delete it. Maybe baad mein kam aaya, nahi aaya, dekhenge, usme kya fark padta hai. But for now, I just want to keep close. So what I do is I take, and then I say, within this data frame, within all the other properties, let me see the columns only date time and close and create a copy of it. See here, it says copy. Copying is one of those things about Python you don't have to think too much about, because if you fall into that rabbit hole, you'll have a really wacky time. You'll almost feel like you're working with JavaScript. But let's just not go into those details. But this is the important part. This is how you isolate a few columns out of whole universe of columns. So I have isolated date time and close, and I'm going to copy this into a variable called data frame underscore close. It says it's done. I don't believe it. Let me check. What is the shape of this new data frame? It's the same number of rows. Now it's just 2 columns. Let me see what columns there are. It retain the columns that I was looking for. Yes, I see that the index says, this is indexed to 2 dimensions, right? So one dimension is date time and close. Let me see the top rows of this data frame. Okay, I have date time, and close. That's what I wanted. Guys, this is just a sanity check. Okay, this is not requirement, but and also, I mean, I'll tell you what, it's good practice. It's good practice, but especially when you're doing live analysis. Not. I mean, sometimes you'll have your entire algorithm just completely coded, your whole data analysis coded. But when you're doing live analysis of data for the first time, it's good to explore. So that's why it's called exploratory study, right? So now here, let's look. Not tails. It's just one tail. Sorry. So yeah, tail. It ends at 30th December 2022, right? So now this is sanity check. Now again, it is closed. How about we have close dot. Let me see the maximum closing price that we ever had in this series. Oops. Okay, given me. Okay, so max is a function. So here you see, I had to put brackets. So see up there, when I said shapes or columns, these are properties of that data frame. Whereas when I say head or tail, that's a function. Fair enough, that's an exploratory function. Now here max is a, we're now looking at the properties of the data itself, right? Now we see the max of closing prices. The maximum closing price ever in this year was 956, right? Let's see the minimum. Why don't you look at the minimum? Minimum was 643. Hey guys, I hope I'm not putting you to sleep, but I just want you to see these functions, and understand that all of this is available to you. At one time or another, you may feel like using it, you may not, but you are aware that this exists, right? Now, let's do one more thing, one more exploratory step. Let us try to visualize this data. Let's try to visualize this data. So what we'll do, one thing we will do is we will import a new library. It's called matplotlib. We don't need to go too much into it. We'll just import matplotlib.pyplot. There's nothing but Python plot, because matplotlib is actually a library that comes from many other languages also. I think matplotlib is also used in R and such other languages. So it's one of those libraries. So matplotlib.pyplot, import matplot as PLT, because the main reason we want to do this is to put our coding. Now we have imported. Now that we have imported, we'll just write a little function. We will say create a plot. Okay. And then, mind you, we're still using pandas here. Create a plot, okay, of font size 12, okay, and that's just for the labels, right? Then we take that plot into a grid, we give it a y label, and we say show. I will not be able to increase the size of the controls here, but let me see. I know that there is, we have a thing. I know we have a ticker running down below, so you won't be able to see many things, but let me try to make the best, do the best that I can. Should be still out of the ticker. Okay. So if you followed me this far, look at this, the lower left-hand side of this of the new window. The lower left-hand side of this new window has a couple of controls, one of which is a magnifying glass. You click on that magnifying glass, and now you can select any part of the chart to zoom into. Okay. We are zooming into this particular line, or rather, let me also zoom into. So this is just to show you that how you can use this matplotlib control. Okay. Okay. So now that we have seen, but again, let's look at the holistic thing once again. Now just look at the data. The data shows, the chart shows that the price initially started somewhere little below 750 on the left-hand side. It went to a minimum below 650. Then after two peaks, it went up and up and up, and it crossed 950 at one point before tapering off, right? So we know the max and min that we looked at. These are the max and min, 650, a little below 650 and a little above 950. Now we have a rough idea that there will be initially there'll be ups and downs till about a little before midway the year, and for the rest of the year it will trend down. Fair enough. Okay. So now we have a fair understanding of or a fair feel of a year's worth of data. You've seen 1 year's data at 1 year. Shivtaruji, thank you. Manish Pansinia ji, where do we download historical data? It has problems, a few rows duplicated. So guys, one thing, and I will use API. I'm sure the presenters will also add this, but please note down this mail address. Okay, Breeze, it's as simple as Breeze API @ICICIsecurities.com. Whatever issues you're facing, duplication or data, see guys, we have also obtained this data from somewhere or stored this data for a very long time. Okay. I understand that. I understand everyone loves clean, neat data, spick and span. But in moving data around from one database to another, then making it available on Breeze APIs and so on and so forth, there's a lot of back and forth that happens. Sometimes, data gets destroyed, sometimes it gets duplicated, sometimes entire rows go blank, sometimes entire columns go blank. I'm sorry about that, but I did assure you, if you write to us saying that, hey guys, Breeze guys, look at this. I tried pulling data from here to here for this script. I came up with blanks, duplicates, destroyed, corrupt. I guarantee you, we will go to the best sources, and which is NSC, of course. We will get our data compared, and we will get the best possible replacement or whatever it is. But in general, and by the way, this is not only for data. Whatever coding you think it's see, if you come to the kind of problems that come to us, they can have only two root causes. It can have one cause of the API is malfunctioning. It's our problem, or you have maybe the documentation was not right, or maybe you were trying to do something you should not be doing, so maybe it is a bug in your code. Either ways, write to us. We will make sure that if it is our bug, we will find out and we'll fix it. If it's an issue with your code snippet, we will help you fix it. Okay, so and by the way, we are the only people in the industry who are doing this. Okay, so make full use of it, make the best use of it. We have IIT level people sitting by to help you. Okay, so don't worry. Write to us. Feel free to write to us. What is the y-axis? This is the number of sessions. Where the y-axis is, I'll close this. Okay, just note it down. Breeze API at the rate ICICI. It's anyway available on our homepage, so you don't need to worry. Don't save. Okay. So again, coming back, right? Okay. Thank you. We brought me back on track. The x-axis is yeah. You're right, Viren. This is the number of sessions, or rather, not the sessions. We remember in the last session, in the last webinar, we downloaded 5-minute candles. Okay, we downloaded 5-minute candles. So each, I'm sure that if you go deep into it enough, you will find that these are just dots. These are just closing prices from those candles. What are these? These are closing prices from those candles. Right now, you see at this point, you see how sharply this is moving. So each of this is one end of 5 minutes. This is one end of 5 minutes. This is one end. Every inflection point is one end of 5 minutes. Okay, so these are closing prices plotted, right? And now that you've taken a whole year of 5-minute candles, it looks a little smooth, but it's really not. Okay, that's just it's an illusion. So now coming back, now we're 5:50, guys. I'm sorry, we started at 5. I think I've been getting sidetracked a lot. Right. So let's quickly jump into what we wanted to do. We wanted to do crossover, right? Now, here's the simplest way of doing it, crossover. And again, I think I skipped this in my last rant. Pandas was created in a hedge fund. Pandas was created by an employee of a hedge fund. So Pandas is basically, it is by finance bros for finance bros. Okay, so you'll be able to do a lot of things in Pandas that you would not be able to do by simply using SciPy or NumPy. Okay, and this is one of those things. So what we're doing, let's start from the right hand side of the equal to side. We're taking the close prices. We're applying a rolling window of 20. This is the key part. Okay, even if I had done this, okay, if I had simply done this much, even then it would have executed. So let's understand from here. Take DF close, take the close series, then apply a rolling window on top, just like we did in the spreadsheet. Apply a rolling window from the top to the bottom. And in that window, what do you do in that window? Take the mean. Okay, we did mean, right? We did average. So mean, is same thing as average. So take the entire close series, apply a window to that series, and in that window, take the mean. Okay. Now to this we added min periods, and then we added min periods. What does min periods do? This means that in that window to calculate that mean, use a minimum of 20. Use a minimum of 20 periods, and if you don't have 20 periods, then don't take the mean. Don't do it. and we will very soon see why. Or rather, let me just show you why. We did this here. We've already done this here. So we had our data series 10, 11, 12, 13. And what did we say? We said we want a moving window of 3, but do not calculate the sum if you don't have at least 3 elements. So the first, when we were considering the first element, we didn't have 2 extra elements prior. When we came to the second, we had only 1 prior element. Now when we came to 12, now we have a total of 3 periods. So therefore we calculate 3. So this is what we are telling Python to do. We're telling Python not to take the mean. Why is this? So we're telling, so let's just execute this, right? I think I've explained this fairly enough. If there's any question, then please put it in the chat, right? So what we do, and then we take this finally, let me just point this out. Finally, we take the move window and then we take a mean, a moving mean, and we store it in a new column. Right? We store it in a new column called 20 underscore estimate. Just so, because we're going to be using other periods also, so we name this one 20 period estimate. Do the same thing in this line for 50 period moving average. Right? And let's take a peek. So you see the first few, NA not a number, not a number, not a number, 50 SMA not a number, not a number. This will happen. This will continue to happen until for the 20th we get to the 19th point where we have 20 point before that, and then for the 50 period will start much later. But guys, relax. We have 19,000 data points. This is enough to start an end on. How about we take a look at top 25 elements? Let's see if we can see top 25 elements. See, here's what I said. It did not start taking a 20 period average until it had at least 20, and then it started taking. I don't think we're able to see the top 55 elements, but that's what happens. And by the time we come to the tail, everyone has enough. So now we are calculating the averages for both 20 and 50. Fine, fair. We'll try to finish in another 15 minutes. Okay. But let's just visualize this for now. Whatever we have done till now, let's try to visualize this. Now, I'm sure as it is, my screen is small for you, but even I cannot see the 3 different lines that we've plotted. What do you plot? We plotted the close. Again, let's take a look at this. We plotted the close price as a red line. Color is equal to R. We plotted the 20 period moving average as blue. And then we plotted the 50 period moving average as green. Okay. Now it produced this, and because they're like, 17,000 shows here, almost 17,000 lines. So therefore everything's mixed up. So let's zoom in. I think last time we were zooming into this part. Yeah, see, now this is clearer. Now, I hope this is big enough for everyone. Now we see that, the blue line crossed below green line and then up again. And then again, blue crossed under. So blue is my 20 period. Then above, all the way up. Then here is a big fun part. Then again here. So we have plenty of crossovers and crossunders, right? We have plenty of crossunders in the 50 period, in the 50. Again, guys, we're just doing data analysis. We're not doing strategy. We're not doing strategy yet. We're just doing data analysis. So, knock yourself out. Then we generate the signals. Okay. Now we generate signal. So now we define, what we do is we define a new column called signal, and then we populate it with zeros. Okay. Then we populate it with zeros. And then we say, wherever, okay, NP is numpy, so that's a small numeric library. It's a huge numeric library, but we're only going to be using a small part of it. So we say import numpy as NP. Now we define a new column called signal. Guys, so what do we have? We had date and time, we had date and close. Then we added a column 20 SMA and 50 SMA. And now using an operation between the 20 SMA and the 50 SMA, we will create a new column called signal. And in that signal, we will write 1 if 20 SMA is greater than 50 SMA. That's all we will do here. Okay. So that's it. Done. Fine. Whenever 20 SMA becomes greater than this column will have ones. If not, then zeros. Uh, okay, so I think maybe I should do a little explainer, a very quick explainer of this where function. What is this doing? It's a very simple logic function. And guys, any one of you who has used spreadsheets, you know if function, right? Right. So what do we do in if function? If a condition is met, if this, let's say, the cell D6, if D6 is equal to 13, then print 1 or print 0. If condition, then this. If not, then that. That is all, right? This where function is not very different. Same thing. Here, I mean, this is why you should love IDs. They can have all kinds of things. So, parameters. First condition, then if true, where true, yield X, otherwise yield Y. So that's a simple function. Okay, that's what we have used. Let me break it down because maybe it's in one line, so you're not able to. So where if condition, if DF close is the same, then 1.0 else 0. Okay, now you see the 3 elements. Let's quickly, we have already done this. Now we have a signal, and based on the signal, let's create position. So now let's, what should I do? What should I do? I think to visualize this, instead of using pandas, let's take this into a CSV and CSV management. Let's analyze this in a CSV. Yeah. Well, I mean, yeah, these guys are analyzing this going also. Let me. We want to do this. We want to do. Okay. There's no harm in visualizing it. So let's visualize it. It's a slightly more, complex thing, but I will not do line by line, right? Because I'm not. The idea here is data analysis, right? And this code will be shared with all of you, so you can always run this code in your own sweet time. Now this one we have generated a. Okay, we see a buy and sell signal without the. Okay, that's because we didn't plot that part. Okay, so let's do this. Let's plot this entire thing. Right. Now what the legend says is that close price will be in black, 20-day SMA will be in blue, and 30-day SMA will be in green. And buy signal will be the up green arrow, and the sell signal will be the down red arrow. Let's dive into it a bit. Let's go to the same part of the graph that we earlier looked at. Okay, that's still a little messy. I'm sure it's not as clear in your screen, so let me make it bigger. All right. Now we have 1, 2, 3, 4, 5, 6, 7, 8 pairs. So 4 pairs of entry and exit. So here we see in this period, when the price is 702, the blue line is crossing under the short moving average is crossing under the long moving average. And so we have a red down signal, means go short. And then here we see the blue line crossing over. And here we see over. That's fine. See, in these parts, now coming to the trading part, now this is how you should visualize both the backtest and these analysis. If you look at this, you will be taking 3 trades back to back, right? These are misfires, these are missed signals. You lose money on these parts. You will lose money because it's too fast, too sudden, right? Whereas if you look at this, Here you took a this thing, right? Here you took a short trade at around 720, 719 at 719, and then you kept your short till 705, right? So that's roughly 14 points, roughly 14 rupees in your pocket. So the whole idea behind trading, and this is what we'll get to later, is how to reduce, you know, quick ins and outs and how to ride the longer ones. That will be the entire idea. But now we have visualized it. Let's move forward. Okay? Now we've visualized it. Now let's simply take it into a CSV. We'll look at the data and we'll end the session for today. Okay, guys. I think that's fair enough for us today. We'll get into in the next session, and this is like that's a foreshadowing or whatever. In the next session, we will really backtest. Okay, this time we are looking at analysis. I'm just getting you started on different ways to analyze. And by the way, I have used moving averages. You can use calculator channel, Bollinger Band. You can use all kinds of things, but the idea remains the same, right? That you have your data series. You have one or two indicators. You have some arithmetic between the indicators, and then you do something. It would have been even simpler. By the way, let me tell you, it would have been even simpler if I had data series, RSI, signal. I don't even have to have two indicators. I can have one indicator. Here we have 20 moving average, 50 moving average. I could have just have it in RSI, right? But the simple. Okay, another trading wisdom, although there are like just 19, 20 people here. But guys, algo mein ek cheez bolte, there's a lot of people algorithms like to say, simple algos do better. Okay, completely on board with it. I agree. If your algo is too messy, you will be confused. You only will be confused why is generating a signal, why is not generating a signal. So simple algos work, right? But too simple an algo, don't go for it. I mean, this is just one indicator algo. I don't know. I mean, maybe somebody has had some luck in there, but I've never heard of it. Don't make it too simple. Okay. If it's too simple, also you will have an issue. So now again, we have the strategy. Let's take it into a CSV and analyze it and be done for the day. Don't save. And here's your slide. Okay. So we see here. So first of all, let's just see. My 20 period moving average did not start till period 19, and it started at period 19 because, as you can see, here is 20 rows. Now I have 20 rows of data. Similarly, my 50 period moving average didn't start till 49 row, because by 49th row it was only on the 49th row that I had 50 historical data points. Okay. Then we said we defined a column called signal. Okay, and we said signal is equal to 1 if my short moving average, which is in the D column, in this column, is higher than my this thing, than my 50 period moving average, longer moving average. So it keeps a 1 there. Okay. And then we defined a position, saying that we will take a position or we will change our position, long to short, short to long, every time there's a crossover. Every time there's a crossover or cross under, right? That's how we defined it in code, and that's exactly what it said. And this is what tells you to take. So a 1 is a long signal, and a -1 you will see here. You go here. There's a -1. A -1 is a short signal, right? So when our signal goes from 1 to 0, we take a short position. When our signal goes from 0 to 1, then we take a long position. That is it, guys. I hope you understood everything. Let me just read the last few questions. It was a great session. Season, can you please cover the backtesting strategy on all shares in FNO? I didn't really understand your question. What do you mean by backtesting this strategy on all FNO, on all these shares in FNO? See, okay. Now let's talk strategy a bit before we close. Okay, I know I'm running on fumes. I've taken 1 hour of your time. Okay, let me address this. So strategies can be of any type. Okay, the world, your imagination runs wild. I mean, people who've been doing this for a while know, right? So you can have simple indicator-based strategies, you can have time-based strategies, you can have, price action-based strategies, you can have anything. Most of you will start with indicator-based strategies. Right? You will take one or two or three indicators, put them together, create some sense out of it. But you know what happens? Now, if you have a long-only strategy, maybe you can do it in equities. But that will hardly be your case, because you will have, if your strategy can give you long signal, it can also give you short signal, right? If it can give you a short signal, then you would want to make position, make money on the longer side also and the shorter side also. So therefore, you will go to futures. Now, the next step of your evolution will be, hey, if I can take long and short, why not leverage and do it with options? Then you will go to options, right? Then you will go to options. And then once you're in options, then you're like, hey, why should I just use my signal? Why not use the Greeks as well? And then it really starts clicking, right? Why not use the Greeks? Why not hedge my long position or my short position? Why just naked buy or sell? Why not have like a spread strategy? This is the evolution, guys. This is the evolution. Of course, in this whole time, you will also apply stop loss. You will also apply rollover. If my spread has has maxed out, why not roll over the spread to the next highest strike and to the next highest strike? As long as the signal keeps coming, because your spread position will give you a bottom, right? It will give you a natural head stop loss. But it will also give you a natural take profit. What if my signal is still positive? My signal is still telling me to stay long or stay short, but my hedge is done. Then you roll over. Then you roll over. So this is how strategies are built up, right? So this is how strategies are built up. You can use the same SMA. मैंने तो ICICI Bank, I took ICICI Bank data. You can take any data. You can consider all Nifty 50 or all Nifty 100. That is the study. That is the study. That is the hard work. And guys, I told you in the beginning, right? Trading should be boring. This is what will make trading boring, because it will require you months and months of time to sit there and go through ICICI Bank data, ICICI futures data, ICICI, to HDFC data, to Reliance data. That is what will make trading boring, but that is what will make it, that much more rewarding later on when you actually start trading. Okay, guys. Sir, I'm editing session for the first time. Can you guide me how to find your starting videos? Mr. Anup Roy, I think your best bet is just to click on our channel and go through our channel. You will find other videos by me. I think my first video doesn't have my face. My previous one does. Sorry, Sultania, it's available. Okay. Where to find this piece of code, guys? So I promised last time, but this time for sure, before the next this thing, or rather tomorrow itself, I will upload all 3 sessions sample code on GitHub. Okay. And how to share the link with you guys. Okay, we will put the link to the to our videos or to the GitHub sample code in our SDK GitHub SDK page. Okay, let me note this down also. In fact, sample code link to SDK. Okay, for sure, done. Anup Roy, I have attended okay, once again, I'm not here to sell you a product. I'm not here to hold your hand and make you transact. In fact, 3 session ho chuke hain. I think it's more than, 4.5 to 5 hours of session time. Aim of these sessions, of this series, is educate, educate, educate. Because I believe the more educated you are, the more analytical you are, you will even not trading, guys. Not trading is also a strategy. Okay. Not trading is also a strategy. I'm not good enough. I don't have the right tools. I don't have the right knowledge. I will not trade. That's also a strategy. But guys, so the main aim is this thing. We will use Pandas, we will use Backtrader, we will use various tools and not place a single trade for the next 2-3 sessions. Don't worry. This is only for education. This is wait enough the previous session videos. Again, Deepak ji, you'll have to go back to this. Yeah. So our Telegram channel, our main Telegram channel is you will find the links of upcoming webinars. Usually we do it, on the same day, a few hours before. All right, I think we have please create a playlist. That's also a great idea. I mean, why not have it? Playlist is a great idea. You also wanted code in GitHub, and we will link this to our Breeze SDK page. Okay, so on the SDK page can then become your launchpad. We can even try to put it on our Breeze homepage. Okay. Okay, and maybe we can also try Telegram. So maybe we will, once in a while. So if you search the Telegram, and so once you put on a Telegram page, so even now, okay, I just remembered. Mr. Anu, Mr. Tarakesh, Mr. Everyone who wanted the previous videos, just go to our Telegram, the official Telegram channel, and click that magnifying glass, find in the page Breeze. Just look for Breeze in that page, and you will find all the previous webinars. Okay. So, guys, I think I'm done. Yeah, it's almost night. So, thank you for putting up with me. We usually do this session again. We do these sessions. So, let me tell you what who was 24 people were still here. We try to hold this session every Tuesday because yesterday was a holiday. We're doing it today. But by next Tuesday, we will do a backtrader session. Okay. So, number one. Number two. All of you who are starting off in FNO, right? For whom FNO is a new animal, new beast, or whether you want to take your FNO knowledge to the next level, or maybe you're experts and you have a very, very specific question on Greeks, on delta, theta, gamma, so on. Every Friday, we have an exclusive FNO hand-holding session that is held on MS Teams. It is one-to-one communication. You guys can come there, open your mic, speak, give your question. Our colleagues who in the past they were prop traders, they were handling crores and crores, very, very intelligent people, very knowledgeable people, and sometimes I will also try to be there. We will solve your questions one-on-one, just like Breeze API @ICICIsecurities.com, where we give you answers one-on-one on mail. Every Friday we will give you answers one-on-one in person. Okay, you can even open your camera, show us, share your screen, and get solutions for all your queries on anything to do with FNO and anything to do with our tools. We have come up with the really great tools. We have come up with, of course, Breeze is here, Spring is there. We have Flash Trade, we have scalping. We have a new watch list with the entire option chain. I don't know how many brokers give that option chain, live option chain in their watch list. We do. Okay, so come there. The link again Friday. By 5 p.m., that link will be on Telegram channel. Okay, you can search for hand-holding. Hand-holding is the keyword. Okay, so guys, I'll take your leave now. How to import Greek data through Python? How to import Greek data through Python? So maybe I'll take an extra session. That's also a good question because a lot of you guys are like very FNO oriented and also very Python savvy or want to get your hands dirty in Python. So maybe I'll take an extra session apart from these sessions just for doing Greeks calculations using Breeze. Because Breeze, by the way, guys, Breeze is one of the few APIs which will give you the entire option chain snapshot. So maybe we should be doing that session in market hours too, because these analytics education sessions we're doing after market hours so that aapka time na kharab ho. But for live option analysis, we should do one session during market hours, right? Anup, thank you for the suggestion, taking it down. All right, thanks everyone. Good night. I hope you learned, and give us your feedback, your free and frank feedback, any topics you want covered, any subject lines you want covered, and we will make sure that we do it. All right. Thanks, everyone. Signing out.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.